Spy Trader Podcast Episode 73. Hello, folks. It's 18 on September 4th, 2024, and you're tuned into another episode of Spy Trader, where we make sense of the movements in the S&P 500. I'm your host, Jimmy Bullions, because just like gold, I'm always seeking value. In today's episode, we're diving into the twists and turns in the stock market, significant analyst insights, and some crucial trading recommendations. But first, let's break down today's hot news. First off, let's talk about Nvidia. Their shares recently took a beating due to weaker than expected manufacturing data, which is stirring up some concerns about a potential slowdown in the economy. This has prompted a pretty significant bump in the road for major indexes, including the S&P 500. Ed Yardeni, the legendary market analyst, came out with some forecasts suggesting that despite the current market turbulence, the S&P 500 might actually reach new record highs post-elections. He bases this on the idea that a divided government, or gridlock, is the best-case scenario for investors. Historically, periods of gridlock have been quite positive for the stock market, as it often means there are fewer regulatory surprises. So keep an eye out for those political dynamics. Now let's switch gears to the Federal Reserve's expected rate cuts. Due to weaker U.S. job data and a decline in job openings, the market is bracing for an aggressive rate-cutting cycle. This atmosphere of uncertainty has led to slight declines in the S&P 500 and NASDAQ 100. Meanwhile, the U.S. dollar index has dropped, leading to a strengthened Japanese yen. Speaking of Japan, their economic outlook got a surprise boost from an unexpected rise in real wages, which might prompt rate hikes by the Bank of Japan. On the flip side, China's government is mulling over measures to support its weakened property market by cutting interest rates on a substantial amount of mortgages. With a string of key economic data lined up to be released soon, including U.S. non-farm payrolls and Eurozone GDP, the markets are poised for more swings. All right, let's get into some analysis and insights. Volatility seems to be the new normal, at least until the election dust settles. Yardeni's insights suggest that investors should brace for ongoing fluctuations and maintain a diversified strategy. If you're solely banking on one sector, you might want to reconsider and spread the risk. Now on to trading recommendations. Given the volatility, it's prudent to adopt a defensive strategy. Consider adding some utility stocks or consumer staples to your portfolio. These sectors generally perform well during unpredictable times. Also, holding onto some cash can provide flexibility to capitalize on sudden market drops or opportunities. Rate-sensitive assets might also be a good bet. With expected Fed rate cuts, bonds or bond funds like Vanguard Total Bond Market ETF could offer attractive yields. Given the strengthening yen and positive wage growth, taking a position in Japanese ETFs might be worth exploring too. And if you're eyeing the tech sector, be cautious. Nvidia's recent slip highlights how even robust sectors can face significant downturns. You might want to pivot slightly and look at companies that can benefit from AI but are not entirely reliant on consumer electronics and manufacturing data. Finally, humor break. Why do economists make bad therapists? They're always rationalizing feelings. So to recap, brace for volatility, consider defensive positions, keep an eye on interest rate-sensitive assets, and diversify your tech holdings. Don't let the choppy waters shake you from your investing principles. That's all for today, folks. This has been Jimmy Bullions on Spy Trader. Stay cool, calm, and collected. And as always, keep trading smart. Tune in next time for more insights and strategies. Until then, happy investing.